Sunnova Energy describes themselves as an energy services provider that aims to make clean energy more accessible, reliable, and affordable for homeowners and businesses across the United States. They provide solar energy systems, energy storage solutions, and other sustainable home products through their adaptive energy platform. The company partners with local dealers and contractors to originate, design, and install these systems. Their customer agreements typically involve a legal lease or power purchase agreement. Alongside this, they offer service plans and repair services for both originated and third-party systems. They believe the quality and scope of their comprehensive service offerings is a key differentiator from competitors. They also offer non-solar financing programs to help customers finance other sustainable home products independent of solar energy systems. Their go-to-market sales approach relies on a network of independent local dealers and contractors to market, sell, and install solar energy systems, storage systems, and other related products. These dealers and contractors operate within the markets they serve, offering localized customer-focused marketing, installation, and servicing processes. They are often established businesses in their respective fields, such as solar installation, electrical services, roofing companies, or those catering to customers seeking solar or backup power solutions. This model helps limit acquisition and installation costs while leveraging the dealer's specialized knowledge, connections, and experience in local markets. Sunnova uses a network model where independent local dealers and contractors market, sell, and install solar energy systems, storage systems, and other sustainable home products. The process involves customer origination and consultation, design and engineering, installation, commissioning, quality assurance, and interconnection. The billing for the customers varies depending on the agreement type, lease, PPA, or loan. Additionally, monitoring and servicing are conducted through cellular or internet connections to ensure continuous operation of the systems and resolve maintenance issues. The company carefully selects and maintains standards for its dealers and contractors who must have experience in the solar industry or related fields. These agreements set ongoing operational and payment obligations based on different project milestones. Training, support, and continuing education are provided to help these partners operate efficiently while monitoring their performance and compliance with requirements. They also have exclusive arrangements with key dealers like Trinity Solar, ensuring a certain volume commitment for agreed periods. Similar contractual arrangements are in place with other important dealers and third parties. In May 2024, the company stopped originating home security and monitoring loans with Brinks Home, but sold about 58,000 such loans to them. They also sold around 65,000 accessory loans during the year ended December 31, 2024, resulting in a net customer notes receivable balance of $142.6 million for $84.9 million. A loss of $43.4 million was recognized from this sale. Additionally, Brinks Home accounted for 30% of their net originations on account basis in the previous year. The company has also established a direct sales team to sell and install specific products and services, such as Sunnova Protect Services, Sunnova Plus SunSafe, and financing options for EV chargers, generators, and other supplements. These services are often directed to third-party installers within their network for installation. The company has expanded its offerings to include commercial, industrial, agricultural, nonprofit, and public sector markets. They provide solar energy systems, energy storage systems, and electric vehicle chargers through lease agreements, loan agreements, or cash purchases as requested by their clients. Additionally, they have developed relationships with various utilities and other providers to offer specialized grid services such as demand response programs and capacity auctions. By providing these services, the company aims to generate additional revenue, enhance grid resiliency, promote efficient operations, and lower power costs for its customers. Cloud-based software platforms have been developed to streamline the origination, installation, administration, orchestration, and servicing of their energy solutions. They use multiple third-party providers, including Salesforce, Amazon Web Services, Heroku, Financial Force, and Infor for their platforms that are compatible with various end-user devices such as smartphones, tablets, and desktops and laptops. Their key software platforms include Sunnova Catalyst Dealer Platform, Sunnova App and Portal, Sunnova Sentient, Salesforce, Financial Force, and Infor. These platforms support customers, dealers, and internal users in the sale, installation, management, and reporting of their products and services throughout the customer agreement lifecycle. The company primarily offers its customers lease and PPA agreements for solar energy systems and energy storage systems. These agreements typically involve little to no upfront costs and offer immediate energy cost savings. The customer's monthly payment is based on factors like the equipment's lifespan and expected solar energy generation, with some agreements including a price escalator. They also provide loan agreements for purchasing solar energy systems through financing. Their lease and PPA agreements include various billing options, such as flat rates without an escalator or lower initial rates with an escalator. In addition, they offer production guarantees to ensure customer satisfaction and repayment collection. The company offers various energy-related services and products through different programs. Energy Storage Systems lets customers choose between an Easy Plan equipment lease or Easy Own Plan equipment purchase plan for solar energy systems integrated with solar storage systems. Sunnova Loan allows for financing of energy-related products and services, as well as other sustainable home products independent of a solar energy system. Sunnova Protect Services provides customers with system monitoring, diagnostics, and repairs for solar energy systems not owned or sold by the company. There are 2 levels of service: Basic, monitoring only, and Premium, monitoring plus repair replacement of equipment under warranty. Sunnova Repair Services offers repairs to solar energy systems and energy storage systems both for out-of-warranty cases and for owners of such systems not owned or sold by the company. Sunnova developed policies and protocols to qualify potential customers for different product and service arrangements. Customer agreements must comply with their underwriting standards, emphasizing the customer's ability to pay and other factors. Credit checks are not required for specific types of agreements, which are freely transferable. Payments are collected via automated clearinghouse payments, recurring credit card payments, or non-recurring means. In case of delinquency, a collection process begins. If a customer sells their home or business, the agreement can be transferred to the new owner following prescribed procedures and requirements related to the prospective purchaser's creditworthiness. Customer agreements typically include a monitoring and service agreement with warranty coverage for solar energy systems and energy storage systems. The warranty and monitoring services can cover operations and maintenance, equipment repairs, site power controls, and energy management. They provide ongoing service during the entire term of the customer relationship, and their staff monitors system performance daily to detect and resolve any issues. Customers receive a range of warranties on the related solar energy systems and energy storage systems, and dealers are generally obligated to correct defects in installation work for up to 10 years. The company also provides pass-through of solar panel and other equipment manufacturers' warranty coverage to their customers. The output of solar energy systems varies depending on the season or year due to differences in daylight hours and weather conditions, such as cloud cover, rain, or snow. However, the geographic diversity of the company's assets helps mitigate this seasonal variability. Different types of agreements are offered: Easy Plan PPAs with variable billing, Solar 2020 plans, and fixed-rate power purchase agreements that are subject to seasonality because they sell all the solar energy system's energy output to customers at fixed or variable rates. Easy Plan PPAs with balanced billing are not subject to seasonality from a cash flow perspective, or for customers' payments as production is leveled on an annual basis. However, they do experience seasonality in revenue recognition. Lease agreements and loan agreements are also not subject to seasonality within a given year, as they have fixed rates and yearly reference periods for any production guarantees. Poor weather conditions can impact installation of solar energy systems and energy storage systems, affecting the timing of system installations and revenue generation. Sunnova operates under various national, state, territorial, and local regulatory regimes. These include marketing and contracting rules in California and New York, as well as limitations on offering certain types of agreements in some states like Arizona and Florida. In Puerto Rico, the company is regulated as an electric service company by the Puerto Rico Energy Bureau. To operate solar energy systems and storage systems, dealers work with customers to obtain interconnection permission from local utilities, adhering to standardized procedures where applicable. Solar energy system leases or PPAs in certain states may require specific disclosures and title recordings. The company's operations, as well as its dealers and contractors, are subject to stringent federal, state, territorial, and local laws covering employee health and safety, environmental protection, consumer interactions, and other regulatory requirements. When talking about policies and initiatives related to solar power incentives, here are some prominent examples. First up, the California Public Utility Commission approved a successor program, Net Energy Metering 3.0 or NEM 3.0, that reduces the value of net metering credits from the retail rate to an avoided cost rate for customers with solar energy systems installed on their homes and businesses over the next 5 years. Whereas New Jersey is considering potential changes to its net metering policies, with stakeholder proceedings and a technical conference convened in February 2025. Over in New York, an alternative to net metering has been in development through a value of distributed energy resources credit that would allow certain customers to receive direct monetary compensation instead of a net metering credit. As for the Federal Energy Regulatory Commission, it issued Order 2222. It's directing regional transmission operators and independent system operators to remove barriers for the participation of distributed energy resources in wholesale electricity markets on an aggregated basis. Many states in the U.S. have adopted Renewable Portfolio Standards, RPS, that require regulated electric utilities to generate or procure a specified percentage of total electricity from eligible renewable energy sources, such as solar energy systems. This includes several states requiring at least some portion of the RPS to be met by electric generation from solar energy systems. To demonstrate compliance with these mandates, electric generation providers must submit Solar Renewable Energy Certificates, SRECs. These represent a separate source of cash flow from the sale of electricity and can be sold either with or without the actual electricity generated. Several states also have energy storage mandates or policies designed to encourage adoption. Additionally, various federal and state tax incentives exist for businesses and homeowners investing in renewable energy systems like solar and energy storage systems. In regards to competition, Sunnova competes against centralized electric utilities based on factors like price, predictability of future prices, reliability, and ease of switching to solar energy systems. They also face competition from retail electric providers, independent power producers, vertically integrated solar companies, solar installation businesses seeking financing or utilizing competitive loan products, and other solar companies offering similar services. Sunnova's state's main differentiators are their comprehensive service offerings, software tools, and dealer programs, along with the commissions they offer to dealers and contractors for new customer origination. The company sources major components for its solar energy systems from pre-approved manufacturers to ensure flexibility in meeting customer demand, competitive pricing, adequate supply, and reduced warranty risks. They negotiate pricing directly with manufacturers for new installations and use a just-in-time delivery model for dealers. All equipment must meet certain standards and warranties, with some components required to have 25-year warranties. The company also sources products from non-Chinese manufacturers to mitigate the impact of tariffs on solar energy system costs. Such measures are crucial due to potential cost increases for solar energy systems and energy storage systems due to factors such as growth in the solar industry, regulatory changes, tariffs, and inflationary pressures. This may affect the company's ability to serve certain markets economically. On the other hand, energy storage systems provide customers with backup power during grid outages and allow them to better manage their energy consumption based on pricing and utility rate shifts. There's also a shift in customer demand from solar loans to leases and PPAs due to higher loan financing costs caused by increased interest rates. The company believes that increasing global awareness regarding climate change and the importance of energy resiliency will lead to continued growth in the renewable energy market they operate in. This trend, along with commitments to reduce carbon emissions and government support for cleaner energy sources, is expected to increase demand for their products and services. However, their growth and operations strategy depends significantly on government policies and incentives that promote solar energy and enhance its economic viability. For more on Sunnova Energy and other companies, follow Ascencore. Thanks for watching and have a nice day.